Hello, viewers. Today we're diving into the dynamic world of sector ETFs and their performance over the past year. Let's unpack the trends and see where the market has taken us. Starting with the standout performer, we have SMH, the semiconductor ETF, which has surged ahead with an impressive gain of 49.8%. This robust growth showcases the booming demand for semiconductor technologies that are the backbone of everything from computers to cars. Not far behind, we find IGV, the software ETF, with a solid 42.8% increase, reflecting the ever-growing importance of software in our digital lives. Similarly, XLC, the communication services ETF, closely trails with a 42.79% uptick, emphasizing how communication platforms continue to expand their influence. Tech remains a dominant force with XLK, the technology ETF, climbing 39.68%, in QQQ, which tracks the NASDAQ 100, rising 36.46%. These ETFs represent the tech sector's resilience and innovation-driven growth. On the flip side, it hasn't been a sunny year for all. The utilities ETF, XLU, experienced a downturn, decreasing by -6.63%. This reflects a challenging period for utilities, which often face headwinds from rising interest rates and economic shifts. As we can see from our chart, the journey for sector ETFs has been a mixed bag of highs and lows. Investors have witnessed significant growth in tech and software, while utilities have seen less favorable conditions. These movements underscore the importance of staying informed and agile in the ever-changing landscape of the market. We're focusing on the New York FANG index of stocks and their performance trajectory over the past year. Let's delve right in and see which stocks are leading the charge and which are lagging behind. Leading the pack with astronomical growth is NVDA stock, with an astounding 220.13% increase. This highlights NVIDIA's dominance in the GPU market and its successful expansion into AI and gaming sectors. Close on its heels is Meta, the parent company of Facebook, with a 199.01% surge. Despite various challenges, Meta has shown resilience and growth potential in the digital space, particularly in social media and virtual reality. Another significant mover in the market is Broadcom Incorporated, which posted an impressive 94.83% gain. Broadcom's expansion in the semiconductor industry and its strategic acquisitions have played a crucial role in its stock performance. We also see strong performances from other tech giants like Netflix, with a 61.79% rise, and Microsoft, gaining 54.68%. These figures demonstrate the robust demand for digital services and cloud computing. On the other side of the spectrum, we have Snowflake Incorporated, with the least growth at 10.7%. While still positive, it's modest compared to the high-flying figures of its peers. This chart provides a vivid look at the volatile yet rewarding nature of tech stocks. Investors have experienced a roller coaster ride, but those who bet on innovation and tech-driven sectors have seen remarkable returns. To all our viewers, this analysis is a testament to the tech industry's rapid evolution and its potential for continued growth. Keep an eye on these stocks as they are likely to shape the technology landscape in the coming years. Stay tuned for more updates, and remember to invest wisely. Continuing from our previous analysis, let's now turn our attention to a couple of specific ETFs that many of you are familiar with, QQQ and SPY. These ETFs track a broad range of stocks in the NASDAQ 100 and the S&P 500, respectively, and they give us a good sense of how the market is performing overall. So let's dive into the details of their recent performance. Starting with the QQQ daily chart, we observe a striking climb after a tumultuous start to the year. The QQQ, which is heavily weighted towards tech, has shown significant resilience, bouncing back with a current momentum reading of 9.61. This rebound is a clear indicator of investor confidence returning to the tech sector, which had seen some earlier volatility. The SPY daily chart, on the other hand, represents a broader market perspective, encompassing the top 500 companies across various sectors. Here, we see a similar trend to the QQQ, with a recovery in progress after earlier declines. The momentum here is slightly lower at 8.92, but it still indicates a positive swing in market sentiment. Both charts feature a bullish angle of 58 degrees on the momentum gauge, signaling that the bulls are taking control after a bearish phase. This is crucial for traders and investors alike, as it may suggest the potential for continued upward movement in the coming months. The green bars in the momentum section of both charts represent periods where the buying pressure was dominant, corresponding with price increases in the main chart. Conversely, the red bars indicate selling pressure, which we see notably decreased in recent months. In summary, the QQQ and SPY ETFs have both demonstrated a powerful comeback, which could be enticing for those looking to invest in the recovery of the tech sector and the broader market. As always, it's important to consider these trends within the context of your overall investment strategy and risk tolerance. That wraps up our analysis for today. Remember, the market is ever-changing, and keeping an eye on these indicators can provide valuable insights for your investment decisions. Thanks for watching, and if you found this information helpful, don't forget to like, share, and subscribe for more updates. Stay informed and happy investing.